Good morning, traders, and welcome to this week's weekly market analysis, Monday the 20th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration.
Good morning. There's been a shift in investor sentiment over the weekend as the Dow Jones and all the major markets globally finished on a high. For last week, that risk mood is changing on the facts that they're looking at possibly reopening the economy, with many businesses scheduled, or they're looking for schedules to reopen very, very soon, especially in the US. Locally in Australia, our own situation is that this morning in New South Wales we had 9 new cases of COVID-19, whilst in Victoria there was only 1. Now, most economists are warning that we could be reopening the economy too soon, only to come back for a second wave of COVID-19, which could hurt us more over the long run. So it's a fine balance between, I guess, lives, preservation of lives, and also preservation of the economy in itself. But definitely the mood is much stronger, as last week the market ended on a high. ASX, our own ASX 200, trading around about the 55.90 as we wait to see where it will open this morning. This week on the major news for the FX world, we have PMI numbers released on Thursday. They're coming in from Germany, France, the UK and the US. So they're all major indicators to see what happens as those currencies move around. Now, of late, I guess of the last 2-3 days, compared to what we have been seeing, the currency markets have traded in a much narrower range. So this week we do have some major news coming to see if we start to indicate a direction, if we're moving back towards the levels where we were at pre-COVID-19. Our own Aussie US dollar is trading around about 63, 64. And it is recovering from that low of nearly 54 only weeks ago. Let's see where it plays out, and we'll have a closer analysis now as we dive into our trading charts.
Let us start off with the Aussie US dollar. Now, if you see my chart here, I've marked out a level, this yellow line across here that I've marked out. And essentially what I'm looking at is, previously this was a level where the market was supporting. Once we broke through, it did come back and test that level and basically acted a change from support to resistance. Now, of course, this was all the panic, the fear of the market during the breakout early March of COVID-19. The market is trying to recover. The Aussie dollar is trying to recover. So a couple of things that I just want to highlight now. Now, in terms of if I was to ignore everything that's happened in this side of the chart, then it looks like we are in a trending kind of market. Now, of course, this is recovering back the losses that were initially made out of panic, fear, unemotional, news-driven type trading. So what I can see, if that was the case, is we would be looking for any kind of pullbacks and trying to trade back up. Now, I will keep this line here because these are the previous levels where we were before all of this happened. So if this market was to continue to drive forward, there would be a natural tendency to think there may be some kind of resistance as we approach that level there. So for those of you who are bullish on the Aussie US dollar, certainly from this point here in this direction, we can see that it does look like it is trending and trending, trying to recover those losses. I would look at this very cautiously, but definitely if I approach this level here, the trade that I'm more interested in rather than trying to trade it up, because it's a little bit uncertain, definitely at these levels here I would be looking for price action reversal and trying to take some kind of opportunity at that particular level there. That's my preferred trade that I see on this particular chart. The only other thing that I will note is if I draw in another line across the top here, we can see that that level there, resistance, this level here, resistance, we are there again. So if you do want to try and trade up to this level, what I would definitely be cautious of is, let's see if we can cross this line. If we can get us a nice green candle, something along those lines, that could give us the next step to reach that level. But definitely when we get there, if we get there, this is the trade that I'm more interested in, provided that I get the price action reversal. Okay, so that's what I can see this morning on our Aussie US dollar. Let's move along and let's bring up our Euro USD. This is the Euro USD. Now this one was an interesting one because it was swinging backwards and forwards quite wildly until it's starting to settle into a narrower range. So what I mean by that is we can see that we've gone the big spike, pulled back just as quickly, back again, and we're continuing this motion, but we're noticing that every time it goes up, it's going up less. Okay, and likewise in the other direction, it's going up less, and we are narrowing into that tight triangle that I did mention last week. Now if we want to try and see if we can take advantage of anything in here, possibly jumping down to a 4-hour time frame. So I'm just moving down to a 4-hour time frame and seeing if we could possibly see we just missed something here that, well, actually nothing really set up for us there, but if there was something there, we could have attempted to trade into this direction. This is really the best that's happening, but on this particular chart, I'm more likely to wait until we break away from this region. So let me just show you. I'm just going to zoom out a little bit so it's a little bit easier to draw, and let me just mark in a couple of more lines. Now I'm ignoring that peak. Normally I would not do such things, but now remember these peaks were caused by the fear of the market. So I'm just going to take these two, okay, just to try and get a level, because it's more likely that we're going to do that or this. The direction, I don't know, and it's not really important. Now remember, when you trade, it's not about predicting the market. That's not what we're trying to do. It's about seeing signals and little traps and setups that we have learned that give us the highest probability of the next possible movement, and that's all I'm trying to do. So should it break up or down, the signal for that break is the same signal, but just in opposite direction, and the steps that you take to try and take advantage of that are the same. So don't get feel bad if you're looking for a long trade and then it goes as a short. It's all about seeing the entries and spotting those high probability setups. That's all we're talking about here. In this particular case, I would be looking for a breakout, and just to make it clear for everybody what it would look like, it would be a candle that looks something like this. Now if it's down, I would be looking for a red candle. And then at the open of the next candle, then that's the signal. If it was in the opposite direction, it would be a candle that looks like this. Now it's important, these are bullish and bearish candles, so basically they have no wicks on either end. Now on the upside it would be a green candle, and then again on the open of the next candle the signal would be in that direction. Okay, so let's see what plays out. Last week I highlighted this, but we're still within the same trading range. We still have not broken out. What I like to do on my charts is I like to leave my lines marked out, so then when I come back and look at it again, I can remember quite easily what it was that I saw in those charts at that particular time. And then if, for example, the market was to move all the way down here somewhere, I can quite easily see, okay, the line that I had drawn in didn't hold out, and so forth. And it's easier just to carry on and pick up where I was. Let's move on. Let's have a look at the US yen. Okay, the US yen has this region, I'll just mark it out, which, look, under normal conditions that we wouldn't have spiked down as low and back. So if I try and ignore that, now I know that I should not ignore it, but if I try to, I can see that once we've recovered out of that area, I've created some kind of a floor there. Okay, so I'm really interested, and also if I come across over here, we can see that our normal trading activity has been pretty much in that area. So this is one currency that seems to be back to normality quicker than the others. Alright, so we were in these levels, we're kind of still in there, a little bit lower. Understand that. What I'm interested here in this particular one is I want to know if this floor that I've drawn is going to hold. Now last week I said let's look for a possible long, and I was looking at a 4-hour chart. So let me jump down to a 4-hour chart. Let me just move this across. I'll zoom in a bit more so it makes it bigger. And actually we did get it, or more or less. I was looking for some kind of a setup there. And is there anything? Oh, not quite. There wasn't nearly an inside candle, but it wasn't. But we can see that there definitely was the movement that we were sort of cautious about. Now, again, it would have been very aggressive, as I mentioned, and it's not really a double bottom. But I just thought I'd highlight it. What I'm keen on now is, let me go back to my daily chart. I'm back on a daily. I want to know if this level is going to hold. So we could get the big breaking candle down. That would be a red one, and that could be a signal to that the US yen is not holding and it's going to fall. Or what may happen is this may just start to drift again. So if it starts to drift again, I just need to see, is this going to be a containment barrier, or are these levels here going to be? So for now, the only possibility of the closest trade coming would be that type breaking trade in a downward direction. Alright, there you have it. Let's move along. Let's have a look at the GBP USD. By the way, if you're looking at my charts and you're lost as to what I'm looking at because I haven't mentioned it, just look at the top corner of my charts. You will see it there. That's the GBP USD. So that's what I'm looking at. I want a daily as well. Alright, what do I see here? This is an interesting one. Let me just drop into a 4-hour time frame. And let me zoom in a little bit. I just want to see if I can accentuate it. No, I can't. Alright, I'll go back to a daily. This is what I was kind of seeing. I'll just draw it in just to make it a little bit more obvious. I see kind of like a rising wedge, and just see the market kind of recovering in this region here. But this is one particular one that there's nothing here. I would not participate with the GBP USD. Is one chart that at the moment I can't see anything decent. I'm just going to put in a couple of markers just for next week, just to remind me. I'm just going to add in a top marker. So what I'll be looking at is to see if there's anything in that area there. Okay, so I don't think we're going to get there, but let's just see. I'll just leave my marker in there to remind me, and that's pretty much it. Alright, so GBP USD this week, not much happening. Let's move it along. Let's have a look at the US CAD. Okay, this is my US CAD on a daily. Now this particular chart, this is what we would call, it's a little bit wider than normal, but this is what we would call a pennant, where we have like a sharp, almost like a flag, like a flagpole, and then we see the pennant is in this area here. And typically the way these charts work is when you have the sharp rise there, they do the consolidation and then they break in this direction, and the expected amount of that break is typically the flag distance here. Bring it across over there, and then that's typically what you can expect as a profit target, as a profit target. Okay, so this one's bigger than normal. I would normally expect this to be a little bit narrower through this region, but nevertheless there it is. So that's one possibility that we can look at. Let me just drop into a 4-hour time frame. Okay, on a 4-hour time frame, it is possible to trade within the barriers, and you can see over here that there was in fact an inside candle to trade back down. Now if you did trade that, I'm on a 4-hour here by the way, if you did trade that, it didn't quite hit the targets, and it's testing and it's coming back down, so I wonder if it will actually drift back lower towards this area here. Alright, so that's another possibility to trade inside the pennant. Don't be afraid to drop down a time division. So there, I'm on a 4-hour, but if I go back to my daily, I could tell that there might have been something in that region there. Alright, so there you have it. That's our US CAD. Let's see what can develop on that particular one. The last currency for this week will be our Kiwi US dollar. Again, this chart very similar to the US CAD, just in the opposite direction. But if I go back to the US CAD just looks a little bit nicer because I've been able to link those tops uniformly across. Whereas if you look at my Kiwi dollar, I'm going back to the Kiwi now, I've actually ignored that spot a little bit because it looks a little bit too, doesn't look as nice. Okay, so with this one, I'm more interested in the region. So this is not really a pennant, but this one I'm interested in this region here as a rising wedge. And let me drop into a 4-hour chart, see if there's anything nicer happening there. Okay, over here, let me just zoom in a bit more. You can see here there was an inside candle that's already happened. So if you took that as a trade, basically your trade would have started there. And over there, you've hit your first target. You can see that this distance here is bigger than your stop distance there. So that's already happened, so it's too late for us on that. What you can look for, if you're interested in this particular one, we can look for another one over there, back down. Again, I'm in a 4-hour chart. If you get confused, just look at my indicator over there. I'm on my H4, or look over there, Kiwi dollar. H4, so that's my 4-hour time frame. Alright, so that's a possibility. Let me jump back to my daily. Yeah, so essentially I'll leave those markers there, and let's see if these levels, if this continues to trade inside this level for this week. Alright, so that's what I can see as a possibility. So let's find out and keep those markers there so we can track it. Alright, let's move along. Let's have a look at oil. Alright, I'm going to jump over, I very rarely do this, but I just want to jump over to a monthly chart for a moment. This is oil on a monthly chart, and what I want to show you is this particular level here that has held for a very, very long time, and then just look at the one big candle right through there. Now, traders, investors, long-term buyers of oil will be very aware of these levels, and typically as the market started to approach this here, typically what people do is they jump in and want to buy, okay, and many of them place their stop orders just behind the marker. Now, if you bought and you place a stop order, that stop order is really instructions to sell. So it's a sell order. Okay, so what happens is if the market starts to come down and starts to trickle into some of these sell orders, the market actually starts to accelerate. It's like a domino effect because it's orders to sell. So all those people who are long are offloading their positions, and essentially it's selling, and it drives the market down quite harsh. And that's one of the reasons we can see that of course there's fundamental reasons that this happened as well, but from a technical analysis point of view, we can see that is an extremely strong bearish candle. The wicks at the bottom indicate that there's virtually no wicks at all, and there was a lot of momentum pushing down, and that was caused significantly by the number of stop orders that got trickled along the way. And I got that from my monthly chart. Now this big drop back here, that was the GFC back in 2008. And of course this drop now is the COVID situation globally, and also the disputes with the oil companies it's OPEC not coming into agreements, and that's caused the market to do this. Now I just wanted to highlight that to you. Let me jump into a daily chart. On my daily chart, I've highlighted this area here. Now the market gapped. There is a big gap there. There's a lot of pressure to try and fill that gap back up. So in the immediate future of oil, this is one that really, this chart, I don't want to trade it. It's too much momentum into one direction. But any buyers, I suspect that if the market does reach back towards this level here, there could be a natural resistance level automatically. Okay, because a lot of the people that have traded here that are trying to fill that gap, as soon as that gap fills, they will be releasing the orders, which will create a natural resistance level. All right, so there you have it. That's oil. Not interested in anything on oil this week. Let's move along. Let's have a look at our ASX 200. This is a nice rising wedge. We can see the market fell drastically, and it's trying to recover, and we're pushing and pushing and pushing. At the moment, no, to be honest, if there's any kind of trade that I would be more interested in, it would be a break back down if we can cross over that support level there. Okay, but it's not a chart that speaks to me. Let me just jump down to a 4-hour time frame. Nothing special there for me, so I actually prefer it on a daily. And look, the only thing that I would consider is a break of this bottom line, but that's it. Alright, so that's my ASX 200 for this week. And the last one for our weekly market analysis, so I look at the 9 major trading instruments globally. The last one is gold, and if we ignore this little section of the chart here, okay, now we cannot ignore, but just these are at different times at the moment, and that movement was caused by that panic. But if we forget about that just for a little bit, or even if we do consider it, I can see that the gold is trending in typical kind of trending fashion. So based on that, we've just had a pullback. What I would be looking for is any kind of price action reversal to occur in that region, and then I would be looking for a long trade in that direction. Now, what kind of price action reversal? Typically, I could get a candle like this, could have a wick, and then I could get a nice inside candle on the other side. Those two candles there, that's my reversal pattern. I could set a pending order at the break of the high, and then if we do break, that would be my entry for continuation on gold in that direction. Before we wrap up this week's weekly market analysis, let's have a look at what's happening. If there's anything happening today, there's actually no major news release scheduled for today, so it's a quiet Monday. Guys, as always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you'll have a fantastic trading week. I'll speak to you next week for our weekly market analysis. Bye for now.